Good day, everybody. This is Johnny Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Wednesday. All right, let's take a look at the market action. We can see that the S&P 500 here has obviously had a terrific drop last week, straight down, of course, within that inverted fallen angel pattern. Now, where it broke down to was the 50% Fibonacci. So you can see here 50% Fibonacci was at 28.66 basically. There you go. You can see that kind of measured out there on the chart. So the low there on Friday was right around that 50% Fibonacci. And of course, we sent that out as an alert there on Friday. Now, what happened after that? Let's just zoom in. Of course, we had that kind of dead cat bounce. So we rallied up in an oscillating fashion, straight back up. And as you can see, we tagged the 9-day moving average right there in today's trading. There you go. There it is, the high going smack into that 9-day moving average and rolling straight over. So, of course, from a technical perspective, that would signify that the momentum is in charge because on that sharp bounce, the moving average is what caught it and turned it back around. So we'll see what happens there. But so far, the moving average has been respected. Now, from an open range perspective, you can see we haven't broken higher or lower than Monday's trading. You can see that green bar there is Monday's price action on the S&P 500. So being that we're on the 3rd of March, whichever S&P signal we get will be valid all the way through till the 19th of March. So we're going to be watching very closely to see, of course, whether we make a close higher than Monday's range or close lower than Monday's range to give us our high probability direction for the first 3 weeks of March. We're still waiting to see that. Now, if we go and take a look, though, how we ended towards the end of the day, this is the S&P 500 as well, but on the hourly chart. I just switched screens. This is on the hourly chart. So as you can see, let me just clean this up a little bit so you can see it perhaps a little more clearly. Just remove all this other stuff. Okay. So what you can see here is the S&P 500 on the hourly chart. So you can see we've kind of moved upwards in an oscillating fashion here. We broke upwards out of this kind of upward channel and have just rolled back over. Now, so this could go two ways. We could bounce here going into tomorrow's trading and come back up to test 30.94. If we did that, that would indicate a possible right shoulder. This could also just be another inverted fallen angel. If I turn it upside down, boop, there we go. You can see there's a possible fallen angel there. And if we just continue lower, then that would be resuming it again, another bearish momentum pattern. We're right at support as we speak at 4:18 Mountain Standard Time on Tuesday. So this is going to be interesting to see how this plays out going into later today and the pre-market tomorrow. So that's what's going on with the market. Now, from a high yield bonds perspective, HYG, as you can see, what happened here on HYG is we broke down last week and we hit that target of $85. And obviously we're able to take some profit there, take some great profits there. And then as you can see today, what happened is it rallied up and tested that channel from beneath, then turning sharply down again. So good opportunity to buy some HYG puts as it rallied into resistance. Again, our commentary has been not to buy the rallies, but to look for opportunities to get out of longs that you weren't comfortable being in, or to in fact short sell the rallies. I did buy a couple of extra HYG puts on today's rally. Got back into some short positions that I sold on Friday, but as you can see so far, HYG has bounced down off that upward channel after testing that today, and so we'll see what happens there. Much like the S&P rallying up and breaking down from resistance also, but the significant change, the significant signal will be if we get that S&P bear signal tomorrow or the next day or whenever that comes. From a stocks above or below the 50-day moving average perspective, we'll just see if this is updated because it wasn't updated. Okay, it is now. All right, great. So stocks above or below the 50-day moving average had a bounce up to 20% and has kind of gone back down today. We're obviously in these kind of oversold territories, but we're in a very special kind of market. This indicator hasn't been around when we've had breakdowns of this magnitude, so we may end up staying down here for a little while. But that's what the indicators are all saying. Now, on to the updates. CYCN. Sorry, CYCN is still holding for now. Again, I've liquidated about 3/4 of this position already last week and the week before as we were going into that because we had those beautiful rallies up to $5.70 and so forth. I'm still holding a small position in this. Had a good move today, but it's holding in there, and I've just got my stop there at $3.82. It'll either stop out or it won't. I'm just going to let that one run. Again, it's just a small position I hold in that. VSTM. VSTM, one of our long suggestions, of course, is rallying nicely up from its entry signal of $2.23. You can see it's up to $2.93 as of today. Really fantastic rally given the market conditions. So I'd consider some partial profit taking, and I'd look at updating the stop signal to 257. ETSY also doing very well considering the market conditions. You can see it's all the way up now to $58.21, which is over 10% rally from our entry suggestion. So that's done well. Again, I consider a partial profit take and moving the stop loss to $53.25. Now, on the short side, HNGR. Beautiful, looking awesome. That hit our profit target of $22.33, down from $25.43 entry. I've taken some profit on that. That was one of the ones I exited on Friday. I am looking for a possible re-entry. You can see the 200-day moving average is sitting right here around $21.80. So if you're still holding that, great. I'm looking at a possible re-entry. The stop loss is still fine, I think, where it's sitting at. So, and as you can see, even with this sharp rally in the market, this stock did not recover at all. And that's what we're looking for in a short. We can look at Crocs. Crocs obviously is one we had already exited. We had some massive profits there on the puts that we took last week. But as you can see, it hasn't had any bounce either as the market's gone back up. That's what we want to see, that even if the market goes up, they still go down. That's the kind of short that we want to be looking at, the kind of short we want to be holding. So because this stood the test of the market, I actually entered back into some a short position using stock instead of options, just because I've got enough options at the moment. So I wanted to balance it out with stock trades that I can automate. So Crocs, I'm back in on the short there. But again, if you could look for a break below $24.87 for another entry point as it breaks below support here, I'd be looking at a new stop signal of 28.79 if that new entry point is triggered. And then momentum to the downside would be the way I would play that, just lowering the stop loss and letting it drop. Obviously, the key thing here is if we break bearish with the S&P indicator, this could go a lot further down in March. And so I don't want to, this would resume a momentum move in the market. Boot just keeps on dropping. Boot's looking good, dropping really nicely today. It was down 5.23%. Yeehaw. The puts are now up to almost $12, so they're doing really, really well. And so we'll watch for that to continue to drop. I would lower the stop loss just slightly to 32.54. Yeah, 32.54. It might not seem like a big difference. It's 80 cents though. No reason to give up free money unnecessarily. FHN had an awesome drop, of course, down from our entry signal at 1570. That went and hit its second target of 1333. Obviously, the put options we discussed were up from 45 cents to over $2, I believe, last week. So it's already a huge move. You can see it resumed its downtrend today. So FHN, I'd consider lowering the stop loss to 1483. This should already be a massive win for you if you got in around the same area we found it at. Again, those options or stock are up significantly. Again, of course, if you were short. BKR. Again, as you can see in all these setups, none of them bounced like the market. that's why we like the individual stocks instead of just the market correlated instruments. BKR, I consider lowering the stop to 18.13. Again, it's holding nicely, so let her run. LPSN avoided its stop loss completely. As you can see, instead of going up, LPSN, actually didn't go up at all. It had a bit of an intraday move up yesterday, then went straight back down, and then of course made another new low today, down 4.2% for the day. So LPSN is also looking good. I'll keep the stop where it's currently at as we go into an unknown market move. SYY stopped out. Of course, this was original entry at 73.30. It dropped beautifully down to this 65.94 area, which if you have a look, if we measure that head and shoulder, right? As you can see, is actually the first target from a head and shoulder perspective. Now, so because we were at that first target, we obviously moved our stop loss to a very tight area of 68.53. So that was stopped out on Monday, rallied all the way up to 73.65, and now we're back down at the same price. So that's the beautiful thing about a stop loss is even though we've all come back down to where we are, it removes all of that pain of not knowing if we were going to come back down to where we are. So if you got stopped out on Monday morning, you could get back in right now, for example, at the exact same price you got stopped out, but removing all the element of surprise of not knowing if it was going to reverse back down. You can see where it reversed back down from was the head and shoulders support or resistance, I guess, in this situation. So that confirms our analysis was correct. Of course, the fact it bounced where it did also confirms our analysis was correct. And this also goes to show why this is not a chaotic market, because the places the stock is moving from and to, where it's reversing, are all levels we've predicted before this even ever happened, this whole crisis. So beautiful stuff. You can still look at a new entry if it breaks down below 65.29, or if you're still holding it, it looks fine here too. So I'll put a little alert for myself. New short at that 65.29 area. CPRT hit its updated stop criteria yesterday of 86.13, but I still like it. It's got a lot of insider selling, and the money flow's gone negative. So I got back into the puts today, and my stop loss is now 91.23. So giving it some more room to move, showing that it respected where that resistance is. In terms of a couple of new shorts, so as you can see, across the board, the shorts have done really well, considering how they've held up in this sharp market bounce. The fact they haven't bounced at all is very comforting. It's still a little bit early. We need to wait for these things to confirm in the next couple of days. But so far, again, the shorts are all hitting profit targets. I've taken my original capital out on all of my shorts. I'm only playing with profits now. That way, no matter what happens, I'm happy with what happens. Even if they all stop out, I'm only losing pieces of profit instead of going into original capital that was there 2 weeks ago. So we talked about that a lot in Trading Room, kind of one of my risk management profiles, just to play with the winnings, kind of like being in Vegas. You know, you walk in with $200 to play whatever, or $20, whatever. You start with $20, you work and you get lucky, and your number hits or something, and you have 100. And you turn to your significant other and say, honey, here's my $20 back. Don't let me lose my original capital. Now we're just playing with the profits. That's the mentality that I'm taking with these markets, because if it really, really drops significantly from here, you're not going to need a lot of money in some of these positions to make significant returns. So it's kind of playing those odds. That makes sense? So there's that one. So the new shorts I took today that we hadn't already discussed was ATKR. You can see this was a nice little. I was looking for stocks that were bouncing straight up into resistance. So ATKR was a beauty, straight up into resistance. It's got lots of downside. It could potentially move all the way back down to its lows of $17.33. So why not? Took a short on that with a stop loss at $40.14. Momentum downside target. And the other one was Lululemon. Lululemon, which of course is an inverted fallen angel pattern. There's some other things going on there as well, which some of you may notice. But of course, broke out of an upward channel, which is not what it's meant to do, which means a bigger move to the downside is building. It rolled over, dropped straight down to support, but the drop was too fast for me. So even though I've been watching this for weeks, months actually, the drop was too straight down, so it didn't give me a good enough entry. So even though I was highly confident it was going to drop all the way to 210, it wasn't by the rules to short it throughout that drop. But the rally back up today to resistance, that allowed me to get in. So it's still early yet. Again, who knows what's going to happen. But this to me was by the rules for a short. Lululemon. The other thing is just having a look at the news from February 24th, which wasn't that long ago. I mean, we're talking about just about a week or so ago, week and 1 day ago. They announced that that they've shut down the majority of 38 of their stores in China. So this can't be good for business. And this can't be good for business. And the stock really hadn't reflected that news and what impact that's going to have. So I thought, look, hey, a rally into resistance, along with the fact that there's some insider selling on it and the pattern. I took a chance on that one. I bought the $250 June puts. Bought those for $27.56. So, and of course, we'll watch how those progress. If this plays out tomorrow, we can hopefully crack through that 200-day moving average around 205. That's also where the upward channel support is. A break of those levels could send this all the way back down to 162 or lower. So very exciting market. But if you're looking for as you can see, the qualities that I'm looking for in these trades is the presence of these qualities of going against the grain with the market, as in dropping while the market goes up, or I'm looking for opportunities that I couldn't take advantage of before, that are rallied straight into resistance like the market did. So those are the qualities I looked for in these trades, and those are the qualities that I like in the existing ones we've just chatted about. So that's it for today's alerts. And of course, enjoy. Happy trading tomorrow, folks. See you then.